Facebook is the world's largest social media network, with a user base of 1.65 billion users. What makes this asset unique is that the value of a social network is exactly the level of user engagement from other users. So the fact that you are the largest means that in all likelihood you will continue to grow and gain market share from others. And in this respect, Facebook continues to add 45 to 50 million active users on a quarterly basis, which is roughly 15% growth on an annualized basis. In terms of revenue drivers, the lion's share of revenue is earned by advertising, and specifically advertising that appears on a display basis in one's news feed in Facebook. In this regard, the business made revenue of about $18 billion in fiscal 2015, and importantly has about an 80% market share of the overall social media advertising industry in the developed world, excluding China. Now, if we place this in context, that equates to about 16% market share of online advertising, whereas something like search would command north of 45%. And we believe that this market share has a long way to run in terms of increasing, and we would expect it could get as high as 33%. If this is the case, Facebook has the opportunity to grow its online advertising revenues from a display perspective by as much as 25 to 30% per annum. Because Facebook has scale and it does not purchase its own content, it's really other people's content which forms the basis of the site. It's a very high margin business. In fiscal 2015, it earned operating margins on a non-GAAP basis of about 55%, and we expect that as revenue grows strongly, that probably has even more upside to it. From a valuation perspective, we've assessed Facebook on a DCF basis, which is a discounted cash flow valuation model, and we estimate value very close to $150 per share, which is about 25% upside from here.